Iran needs rice and India has rice, but despite that, why is this trade on the verge of collapse? Namaste, I am Ravindra Gautam, and in today's Big Picture, we will talk about a story that sounds like just another simple piece of news from the rice trade. But as we peel back the layers, you will realize that this is a much bigger story. On one hand, Iran needs rice, and on the other, India has rice, meaning the buyer is ready and the demand remains strong. Yet, the rice trade from India to Iran is currently under immense pressure. So the obvious question arises, where exactly is the problem? Is the problem not with the rice itself? The real problem perhaps lies in the route through which this rice reaches the buyer. And this is where things become even more important than the rice itself in this story. Payment, banking, shipping, insurance, and a name you might have only heard before in news about crude oil. That is, the Strait of Hormuz. Right. Where did words like Hormuz and banking come from in a simple trade of rice? This is the very question we will understand step by step today. So let's start with the fundamental question. Why does Iran need Indian rice so much? For Iran, food security has always been a huge priority, and rice is a crucial part of this food security. According to reports, last year it imported more than 1 million tons of rice from India. Just pause for a moment and think. This is no small figure. It directly means that for India's rice exporters, Iran has not been some trivial or irrelevant market, but a large, stable and reliable buyer. So the natural question that arises here is, when the buyer is ready and the demand is consistently there, so where exactly did the problem arise? So friends, let's understand this with a simple example. Suppose an exporter in India has rice ready, and on the other side, the Iranian buyer is also sitting ready to place an order. But the questions that follow immediately after this are actually the root of this entire story. Who will make the payment? Through which route will the bank transaction happen? Who will send the shipment? Who will provide the insurance? And finally, which shipping route will be used? Friends, understand this carefully. In international trade, it's not just a direct deal between a commodity and a buyer. There is an entire financial and logistical system standing behind it. Banks, insurance companies, shipping lines, compliance rules, and numerous mediators. And today's entire story is actually about this invisible system. It's a story that usually doesn't make it to the headlines. Friends, now from here onwards comes the issue of US sanctions. Yes, it is very important to understand the matter of US sanctions, specifically how their impact can directly reach a rice exporter. Understand this in very simple terms. Sanctions increase, and because of this, banks become cautious. Making payments starts becoming difficult gradually. Traders start exercising caution, and this caution eventually extends to shipping and insurance as well. And ultimately, it results in export disruption. There's one thing to understand here that often gets overlooked. Many times, the impact of sanctions isn't just limited to the entity they are directly imposed on. It creates a sort of risk perception across the entire financial ecosystem. Even if banks and traders don't have a direct connection with the sanctioned entity, they still take caution, and this vigilance gradually slows down the pace of the entire trade chain. Now friends, a name becomes very important here, and that is the UAE. In regional trade, logistics and financial connectivity, the UAE has long played the role of a crucial link. So the question that arises here is, if any significant trade or payment channel operating with Iran, which the UAE operates, if it suddenly gets disrupted, how easy will it be for Indian exporters to immediately find another route? And this is exactly what is crucial to understand. Finding an alternative route doesn't just mean picking another port on the map. As soon as the route changes, the entire freight calculation changes, transit time changes, insurance terms change, the entire process changes. Compliance requirements change, and the intermediaries working in between also change. In other words, just changing the route isn't as easy as it sounds. So in such a situation, One name naturally comes to mind, and that name is Turkey. I mean, India to Turkey and Turkey to Iran. So friends, according to reports, traders have started looking at this as a potential alternative route. But let's be very clear about one thing here. This is currently just a potential alternative, not a guaranteed or sure-shot solution. So the question here is Turkey really a new way to get Indian rice to Iran? Viable corridor? Right now, it is only being explored, and it would be premature to consider something that is just being explored as equivalent to something that has already proven to be commercially viable. Friends, now we can understand this entire issue through three possible scenarios. The first is the best case scenario, where alternative channels for payment and shipping are found and our trade continues almost normally. The second is the base case scenario, where trade doesn't stop completely, but costs increase, transit routes change, and it impacts the exporters' margins. This affects the prices and overall volumes. And the third scenario is the worst case scenario, where friends, both payment and shipping remain disrupted for a long time. In such a situation, Indian exporters might be forced to look for other markets. And these three scenarios these should not be seen as definite predictions, but rather as analytical possibilities. It is also important to note here that none of these scenarios are set in stone yet, and the situation could go in any direction in the coming days. Now, it is also important for you to understand the difference between Basmati and non-Basmati rice. Reports indicate that there has been a sharp decline in Basmati shipments, and if the payment disruption drags on for a long time, then this could also impact India's premium rice rates. However, where sufficient and concrete data is not available, the most correct and responsible approach is to avoid making any speculations. So friends, the question that arises here is, if the Iranian market weakens, can Indian exporters sell rice in other markets? Now friends, one thing to note here is that while India's global rice market is certainly very large and diversified, replacing one buyer with another overnight is not as easy as it seems. It sounds, why? Because in every market, quality preferences are different, prices are different, varieties are different, regulations are also different, and what's more, payment terms are also different, freight calculations are different, and the competition there is also of a different kind. In other words, market diversification is definitely necessary, but this isn't an instant solution that you get overnight. Now friends, let's bring this whole story down to the ground level, because this is where its real and deepest impact is visible. This chain works in such a way that any change in geopolitics directly affects export orders. A reduction in export orders affects the margins, and when the exporter's margin is hit, it impacts the rice mill's purchasing. And when the rice mill's purchasing drops, it directly impacts the procurement from farmers. And if exports decrease, then both demand and procurement can be affected. And if we manage to find alternative markets in time, then the impact will be completely different. Any geopolitical development happening in Tehran affects Punjab. Haryana, Uttar Pradesh, or any other rice-producing region in India is not as far away as it seems at first glance. And from here, this seemingly small rice story gradually turns into a massive global trade story. So friends, now let's talk about the real big picture of this entire story. The question is not whether India just needs to increase rice production. The bigger question here is, will India also need to prepare its entire export infrastructure to withstand geopolitical shocks? And in the coming times, the competitiveness of any exporter can no longer be limited to just price and quality. Friends, in this, payment, security, logistics, shipping options, and geopolitical resilience are becoming just as essential parts as anything else. It used to be about the quality of rice and its price, and friends, in the end, I leave a big question for you. If it's Iran today, tomorrow it could be some other market. So the question here is, do Indian exporters have enough diversified markets, payment channels, and logistic routes available so that the entire trade model doesn't get shaken up by a single geopolitical crisis? Because today, in today's world, just producing rice is perhaps not enough. It has become equally important to deliver it to the right buyer at the right time, at the right cost, and most importantly, safely amidst the changing geopolitics. Friends, I would also like to mention an opportunity for you here. If you are a rice exporter and are looking for new markets for yourself, then the India International Rice Conference is the answer. With buyers from over 120 countries coming to Bharat Mandapam on the 23rd, 24th and 25th of October for the 2026 event, you should also participate and find them. New countries and new buyers for yourself, and that is the big picture for today. Thank you all very much. Namaste.